Hey traders, checking in on the stock market today. We have the bulls continuing the bounce, and every day it's a different sector leading the way with the rotation game strong. Not a ton of opportunity out there today with some constricted ranges compared to what we've seen over the last week of trading. So hopefully if you were trading a name that has a smaller range over the last 5 days, you had less trades than any day over the last 5 days. We want our aggressiveness to match the amount of volatility that we see. Let's look at the charts. So the S&P 500 4-hour chart, the futures chart on the 4-hour, higher low, higher low, higher low, and here we are testing the all-time high, and bulls have complete control. So it is a V-shaped bounce at this point. The only hope for the bears is a double top at the all-time high, and then a pullback to scout a daily higher low with lots of space for that higher low to form. So again, the weekly EMA 12, and if you go back and look at, I forget what video it was, maybe last Thursday. It was either last Thursday or this Monday, just coming straight off of the back of some notable fear, but the full realization that bigger picture, there were absolutely no red flags for a ton of markets and ETFs. And so the S&P 500 is right off the weekly EMA 12 yet again. You can make a simple statement. I can't go aggressively bearish as long as the weekly EMA 12 is support. And again, when was the last time we've seen all of our major sectors, QQQ, XLF, XLV? When have those three names hit the low of the day at the same time? I don't remember the last time it's happened, which means it's been weeks and weeks, potentially even months. So again, if we're not getting the main bear signal, the bulls are going to keep their control. The NASDAQ V-shaped bounce, all-time high being tested. It's a double top. Even if we reject, we just watch our 4-hour higher lows. So the bulls have complete control. We're either getting a new all-time high into tomorrow, or we reject and maybe have to see some daily consolidation first. It would be a potential cup and handle even if we do reject. Just looking at it on QQQ here, if we were to reject the 4-hour time frame, we would then watch for the potential of a bull flag to see if it were going to be a cup and handle pattern. So that's the setup for the bulls tomorrow. Even if we see weakness, it's a potential cup and handle. IWM topped out on the daily. So there were some bears out there today. IWM, one of them. So the daily top of the bounce is set. Our new lower high, 222.22. And now we watch the hourly downtrend. And technically not a confirmed hourly downtrend. We just lost the hourly uptrend by breaking the low of yesterday. And if we're going to confirm an hourly downtrend, we'll have to break the low of today, tomorrow. And then we scout a daily higher low, anything above 209.05. And it's up to the bulls to confirm an hourly trend change back in their favor while holding that level for the daily higher low to try and be established. XLF, daily lower high set. So 37.14 was resistance. New lower high, 36.78, same deal. We're watching for a daily higher low, anything above 34.90, and we're watching for the bulls to change the hourly trend back in their favor and try and confirm a daily trend change, which we haven't seen in a while. Last time we saw a daily higher low and higher high was back on the way up to the all-time high. Have not seen that since then. With that pullback on XLF, so again, watching for the travel names to be bearish today. And headed into this morning, I was planning on trading, but then things came up and I got a little bit distracted. Wasn't able to focus as much as I wanted to. So I did a small amount of trading today. And again, as I mentioned in the intro, on less volatile days, and when you're just looking at SPY. So SPY had the least amount of range today than it's had in the last 6 or more trading days. Probably even more than that, but definitely the last 6. QQQ wasn't as tight. But my point is, when you have the smallest amount of range, you want to be trading less. On the big range days, there's more opportunity. On the small range days, there's less opportunity. So swing trading, that's not necessarily the case as far as you want to trade less, because you could still be positioning yourself. But if you're looking to day trade, less volatility, less day range, less opportunity. So with XLF pulling back, headed into this morning saying, all right, I'm scouting some bearish entries. I'm scouting top fishes. Because we were opening lower. I didn't get my gap up open that I wanted to be real extended on the travel names. We opened lower on Jets, CCL, and RCL. And I was also watching Canadian MJ. As I pointed out in the video yesterday, Canadian MJ has been bouncing on declining bear volume, declining bull volume, and just looking for the daily lower high. In the end, I did trade Jets bearish first thing right when the bell rang. It wasn't an ideal setup because we weren't right up at the highs. And I want a top fish where I have the least amount of risk. The closer to resistance, the better. And the high of yesterday on Jets was 23.47, and we opened at 23.21. So that is a percent away. I want 0.2% away so that my potential reward is multiple times more than my potential risk. And if we're 1% away, just want to make sure that is 1%, roughly 1%. So if we're 1% away, I need at least a multiple percent drop for it to be worth it. And just wasn't confident in that. But I did take a bearish entry first thing and flipped it real quick. And it was like a 15% day maker. And it was just seeing a lack of bear follow through once the bell rang. And knowing that with that lower open, we were just looking for an hourly high or low. Anything above, taking off extended hours to make it more clear, but anything above that low of yesterday was just an hourly high or low. And we double bottomed at the low of yesterday and didn't get any bear follow through. In hindsight, who would have been the best name? Let's just look at the cruises. So CCL, again, lower open. The high was 23.36 and we opened, and really it was right before the bell rang, we dropped down and it made it, you can see like, oh, scouting a great short up here, and then as we get closer and closer to the open, it's just less and less ideal of a setup. And even here, it's like, okay, we're getting back up towards that resistance. I'm looking for this top fish, and then we dump, and the bell rings, and just like that, we open 1% lower than where we were 5 minutes ago. So it just wasn't the ideal setup. Again, a little bit of downside from there, but not ideal. And it was just a very tiny range. And again, today's range on CCL was the least amount of trading opportunity in at least a week. And RCL, same thing. Just real tight daily inside bars. The inside bars have to break bear tomorrow if we're going to see daily consolidation begin and the top of the bounce be set. The winner for the best short was CGC. So I laid out 5 tickers that I'm watching. I chose Jets first thing. CGC was the one to pick. Why? High of yesterday, 20.46. Open, 20.33. High of the day, 5 pennies higher. We rejected from the high of yesterday by a fraction of a percent. Whatever it was, 0.1% or so. And that is the ideal trade, because then from there, you look at your risk reward. If you enter on that first 5-minute candle, even if it's not the top, you know, I can enter down here and I'm risking, well, at that point it would be 1%. But let's say I was aggressive and entered first thing. We're risking 0.3, 0.4%, and in the first 30 minutes of trading, we drop 3%. So that's the kind of risk reward you want to see. XLV, all-time high. Lead sector bull. And again, the video where I was talking about everything being fine, it was QQQ and XLV weekly charts highlighting the EMA 12 support and the potential that they could be bull flags, and they're both on the verge of confirming bull flags. EMA 12 support on the weekly time frame should be one of your major guides for these major sectors through the rest of the summer as long as they're holding. Biotech sector, looking a little toppy. It's a daily inside bar. If it breaks bearish, we'll set a new daily resistance level at 130.50, and we'll look back at our base of support down at 123.67 for the bulls to try and maintain a higher low compared to that level. Let's see what other growth did. PTON, daily consolidation underway. That was a nice follow through for the inside bar bear break. Who else we got? ARC, a little toppy day, not as weak. Forgetting all my growth names. NIO, that was a nice top fish. Rejected from the high of yesterday by a penny. So rejected by a penny, and then look at that downside drop where all the bulls bail, seeing the failure to break resistance, and all the bears jump on it. A 3.5% drop in a half an hour after that double top. So there were some nice top fishing plays out there for bears, just not a whole bunch of them. PTON, who's the other one? PLTR. Daily lower high set, rejecting from daily EMA 12 resistance. So some of these bounces have topped out. And again, that's why I'm talking about individual names, I'm scouting those daily lower highs. I'm not messing with the S&P 500 for a daily lower high, because if anybody's going to V-shape, it's going to be the S&P 500 because of its rotation. And if you've noticed, every day this week, growth and QQQ lead, and then XLF has a day the next day, and growth and QQQ consolidate. They've gone back and forth every single day this week. They're taking turns. SMH, daily, inside bar, double top. If it breaks the inside bar bearish, our daily lower high is set, and we scout a potential daily higher low to try and form. So there are a handful of inside bars to be watching tomorrow. Biotech sector we just did, inside bar as well. MSOS, daily inside bar. Actually, we broke the low of yesterday by a few pennies. I exited half of my MSOS today, knowing the daily lower high was the most likely scenario, and the RSI on the daily has cooled off, which is what I was waiting for before I trimmed this position after the bear break took place. And it's up to the bulls to prove a daily trend change if we're going to see any kind of follow through, but the MJ sector remains a lead bear growth name, growth sector. The VIX tried to set the daily higher low, but failed to confirm an hourly trend change. We pretty much just tightened up on the hourly, so bulls would have to break the high of today tomorrow for the daily higher low to be set, and we would then scout a daily lower high to be the result of that bounce. Anything under 25.09. The dollar. So potentially breaking bearish from this rising wedge, but seeing what this 12-hour candle looks like, that warrants a little tweak. Still within it. I was on the daily there. Let's go to the 12-hour. That's where it is. Still holding. Keeping a close eye. With that, we've got gold double bottom again. Now it's a triple bottom, breaking support with zero follow through. So I'm still considering this just a base here. 1791s, 95s, 94s, 92s. So clearly a base at these levels that bulls are attempting to defend. If we do not break 1825, bears keep short-term control. Silver, daily bounce follow through. So regaining against gold a bit here, but just looking for a daily lower high, anything under 26.46. And the miners flat, just sideways the last 4 days, nothing going on. We're holding support, but we're not breaking resistance. And almost looks like we're in wait and see mode. Could it be a daily bear flag? Absolutely, that's a possibility. Oil, V-shaped bounce as well, but still scouting a daily lower high compared to 74.90. 4-hour uptrend is our guide. Anything above 69.86 is a 4-hour higher low. When we lose the 4-hour uptrend, daily lower high has likely been set. Plenty of space for a daily higher low to then try and form once we top out. Natural gas bulls right up at $4, keeping the move going. 4-hour bull flag off of EMA 12 support. $4 psychological resistance. 387 is the new 4-hour most important support level. And if we lose the 4-hour uptrend, we'll look for a daily higher low. The bulls keeping their control for now. So again, didn't do a ton of trading today. Tiny win on Jets, just a little quick flip, and I bailed quickly with the lack of follow through. Didn't like how we opened the day. From there, MRNA. So I know the bigger picture, the most likely scenario for me is a lower high compared to the all-time high. We hit the all-time high, we dropped down 15% or so, and now we've bounced. And I would anticipate a tightening range and an inability to break the all-time high, at least initially. We've got a pattern of a higher low every day, and that pattern has been intact now for the last 10 days. So we're watching that pattern, which aggressive bears can look for as a signal to act on. But okay, bigger picture, I'm scouting a 4-hour lower high compared to the all-time high. We see a big bull move to start the morning, a big drop, and the first time I looked at MRNA on the morning was right here. And it's because someone said something about it in the chat room. Which again, all of my trades, I don't use any scanners. I don't do anything to look for trades except for utilize a community of hundreds of people looking to do the same thing. And we had a clear top fish. To see that kind of a drop and that kind of a bounce, what's the most likely scenario with that much volatility? An equilibrium. We had already bounced over 3% in 20 minutes before we're even getting to resistance. So I shorted a lower high there, covered into the drop, anticipating a 5-minute higher low. I did enter bullish for the 5-minute higher low, but I was a little bit too early. My entry was in the 319s, so by the time we got back to the 319s, just cut it break even. And then I shorted again for this lower high. And again, just trading within the equilibrium. And at that point, I said, okay, I am choosing the direction that I feel the equilibrium is going to break. Oftentimes, I won't do that. I'll just trade within the equilibrium or trade the break of an equilibrium. But because I had the 4-hour most likely scenario for me being a lower high, I wanted a bearish position in this equilibrium. So what did I do? I know that we're on a bounce. And I know that anything under 327.94, we're on this bounce right here. Anything under 327.94 is just a 5-minute lower high. So I am scouting for that lower high. There's a number of ways that I can do that. I used to, and sometimes I still do, but I used to just scale in 1, 2, 3 orders, stop loss. Maybe 2 of them will fill, hopefully, and then we pull back. That's one strategy. It's a little bit less controlled than I like. I personally would rather zoom in because what I saw was a 1 hour or a 1 minute opportunity. So I'm scouting a 5-minute lower high compared to 327.94. And so it's on the bigger picture time frame, it's low of the day, 5-minute lower high, 5-minute higher low, and now this bounce is taking shape. So I see this pullback right here, and I say, the size of that 1-minute pullback, I'm going to try and top fish 323.44, anticipating a 1-minute lower high. And I had a great entry in the mid 322s, pennies away from the top of this bounce. We confirm the 1-minute downtrend. Our 5-minute lower high is set. I didn't want to place my stop loss up off of 328. That's way too much risk for me. So I tried the very close by level. I put my stop over 324.01. So I'm risking $1.50 of risk as opposed to playing off of a level that would have been over $4 of risk. So it's much smaller risk. Probability that I would have stopped out is higher. But we pulled back. I exited half of my position. I put my stop over 324.01 and I left the computer for a few hours. From there, the bulls played great D. Got to give it to them. Low of the day, double bottom, triple bottom, and I stopped out while I was away from the computer. Let's go to the 5-minute time frame. So just a triple bottom of support, and then the lower highs broke. And the bull signal here was the break of 321. And I stopped out on this move, and that was that. Probably pretty much a break-even trade. Actually, I take that back because I had the first win. It was probably a half-day maker or something like that. 20 or a 15% day maker on Jets. I ended the day up a 60% day maker, and my swing positions were down a half-day maker. So my day trading was pretty much a day maker. One more trade, AMC. So AMC, I was watching for a gap down open for things to get extreme. We didn't gap down, so that kept me patient. And then I'm just waiting for hourly oversold. And we dropped down to an hourly RSI of about 32, or maybe even a little bit lower. And I was picky. I was saying to myself, nah, I'm still not interested. And I was watching it, but I was stubborn and just saying, give me hourly RSI under 30 and I'll start scouting a trade. But then a real beauty of a 2-minute falling wedge formed. And I just drew this falling wedge. And I was probably watching it on the 1-minute time frame. Some names are not volatile or liquid enough to be watching on the 1-minute time frame for me, and others are. And AMC is certainly one that is. So I had my downtrending support line drawn and my downtrending resistance line drawn. And it was down here, and I just said, all right, I saw a 1-minute bear flag confirmed with 0 follow through. And once my support line held again, and I had drawn this wedge back here, and once my support line held one more time, because again, if you're going to follow through, that's a 1-minute bear flag where you break this falling wedge bearish. But if you 1-minute bear flag and then jump right back in and hold that support line, all right, I'll start scaling in. I'm in my first entry. I would enter one more on a lower low and then place my stop loss based on dollar risk, but didn't have to because the bounce started after that. Exited half, let it play out a little bit, exited the second half. because at that point my day was flat. I was leaving the computer, and rather than let it ride like I let MRNA ride, I said I'm just going to lock this one in so I have a green day. The baby turkeys are back. They're fairly slow growing. They're still not teenagers. Completely lost my train of thought. So, whatever I was saying, we're done. All right, not a whole lot of trading today. Very insignificant day for me overall. And we'll see if that changes tomorrow. Broader market. If any of these bear plays are going to get any follow through, the MJ sector lucked out in terms of getting follow through today, but it's the weakest sector. But we need broader market consolidation if any other names are going to get any bear follow through. And we just haven't had that the last 4 days. Again, you could not ask for a better V-shaped bounce. And again, just think of going back to Monday and saying, hey, we're going to be testing all-time highs before the end of the week. How many people participating in this market would have believed you? Some, but the vast majority were in the grips of fear and in the grips of bear. I mean, the amount of posts that popped up on Monday talking about the Elliott wave top being set for the next however many years, just keep it simple and just do your best to not have a bias. My bias is based on the weekly EMA 12. That is a bias, absolutely. But it's a bias based on a trend. And I'm going to stick with it until it's gone. Have a good rest of your day. Do good things. We will see you soon. Next week, I'm going to be traveling a little bit. I'll do a video Monday as usual, but going to be a lot less videos from me next week. This is some Chinese pink celery. We'll add that. We'll add some dill flour for some flavoring. That's the dill flour. Onions aren't very sized up. They like the spring and the fall better than the summer, but it'll add some flavor. This is some garlic I've already had curing, just hanging and drying out. Drinking my blackberry and rhubarb water. Some cleaned vegetables. I'm going in a crock pot. This carrot variety is like a gobstopper.